Welcome to Building the Future, hosted by Kevin Horek. With millions of listeners a month, Building the Future has quickly become one of the fastest rising programs, with a focus on interviewing startups, entrepreneurs, investors, CEOs, and more. The radio and TV show airs in 15 markets across the globe, including Silicon Valley. For full showtimes, past episodes, or to sponsor the show, please visit buildingthefutureshow.com.
Are you looking for a designer to help you with your next product or startup? When I'm not working on the show, I'm busy working as an award-winning chief design officer and have been doing software design for startups and other companies for over 20 years. I'm also a published author and recently sold a startup to a multi-billion-dollar company. For more information, visit kevinhorek.com. That is KEVINHOREK.com. Welcome back to the show. Today we have Jeff Ransdell. He's the co-founder and managing director at Rokk3rFuel Venture Capital. Jeff, welcome to the show.
Well, thank you. Glad to be here.
Yeah, I'm really excited to have you on the show. I've known about you guys for a number of years now, and I think what you guys are doing in the venture capital space is actually very innovative and cool. But maybe before we get into all that stuff, let's get to know you a little bit better and start off with where you grew up.
Yeah, so I grew up on a ranch in southeastern Colorado.
Oh, cool.
Until I was around 12, and then from there, I ended up in North Dakota, Minnesota, and Canada. I was a hockey player and kind of roamed around that territory until I was 21.
Very cool.
I went to the University of North Dakota.
Okay. What did you take and why?
My educational background is finance and international finance. That's a great question. I've never had anyone ask me that question. I think it's a good one. Why finance? Finance, just because I was very interested in business.
Okay.
I had owned 3 businesses that I started when I was very young, and so I was, kind of had a lot of entrepreneurial mindset, and so it made sense to me to try to align my education with the things that really drove me. And then the international finance component was just, I felt that the world was going to continue to become more democratized, and the bumpers and the barriers that existed at that time would slowly start to erode. And I just wanted to have an understanding of, how other countries approached economics and approached finance. And so that's why I studied finance and international finance.
Interesting. No, that makes total sense. It's interesting, like meeting people like yourself that are doing venture capital when they've actually been a business and an entrepreneur kind of first, right? So you understand both sides of where people are coming from, right? Where I find sometimes if venture capitalists haven't actually done their own business before, they sometimes don't understand what it's like to be in the trenches sometimes building this stuff. Do you agree, or what are your thoughts around that?
I think it's an incredible insight. I agree 1,000%. As a leader, I think it's extremely important to always have empathy, and it's hard to have empathy if you've never sat in that person's shoes. And so, yeah, I completely agree. I don't think it's a necessity.
Sure.
I mean, you can be a venture capitalist and be quite successful, and there's a lot of them out there. But I definitely think that if you built your own company and you understand how difficult it is to do that, and then you get into a situation where you're investing in people that did that, you have a lot of empathy. And I think that just makes you better from maybe an emotional intelligence perspective.
Yeah, no, I 100% agree with you. So walk us through your career up until Rokk3rFuel.
Well, up until Rokk3rFuel. So again, as I said, I started off early and started a number of different businesses, and I sold those businesses off.
Okay.
And I started a career in 1994, so I'm going to age myself here a little bit. But in 1994, I started with Merrill Lynch, and I started out as an equity analyst, junior equity analyst during the dot-com days. And then that I did that for a while, and then I started managing portfolios for ultra high net worth individuals and family offices.
Okay.
And I did that for about 3 years. And then I was asked to go into leadership, and I had a number of different roles in leadership. It was a 21-year career. The last job that I had was I was one of 6 people that ran the firm. My responsibility was the state of Florida, the state of Alabama, the state of Georgia, Latin America, and the Caribbean. And it was referred to as the Southeast Division.
Okay.
And so I was at Merrill Lynch for 21 years. And then in 2016, I retired from Merrill Lynch in the public markets to come and start Rokk3rFuel and really focus, instead of broadly on a number of different asset classes, specifically on venture capital. And, the impetus that drove that decision was simply that I felt individual investors and family offices, in a mass way, were getting kind of left behind. To access the creative economy, you really have to know someone who knows someone who knows someone. And so I felt that there was a huge gap out there, especially for, let's just call it, private clients.
Okay.
And so, I spent a lot of time while I was at Merrill Lynch doing my research, and I saw a lot of things that were in the venture capital private equity space that I felt were deserving to be improved upon for the sake of the investor.
Okay.
And so we started this fund really with the idea that we wanted to bring the plan, the process, and the discipline of the public markets, which are very scrutinized. I mean, the public markets in the United States are probably the most heavily regulated business in the United States. And that's good and it's bad. In some ways it dampens creativity, but in other ways it's very good for the end consumer, right? The client. And when you kind of roll into the private equity space, you don't see a lot of that really pragmatic, risk mitigated, investor driven thought process. And so we decided that we would start this firm and try to be a little different, kind of the purple cow theory, if you will.
Got you.
To come into the marketplace, really focus on ultra high net worth individuals, family offices, institutions that serve them, and bring the capital markets plan, process, and discipline to the space, and try to improve it a little bit, which we proudly think that we have.
Interesting. Well, and it also gives those individuals probably different types of investments in their portfolio. Is that correct or fair to say?
Well, yeah, because if you think about it, right, if you go to a major Wall Street firm, and hopefully it's okay if I mention it, I'm not trying to be disparaging or anything, but in fact, we don't even need to mention the names. Okay, any major Wall Street firm, you go in there as a typical investor, and you assume those individuals are going to look at you as an individual and craft a portfolio and a financial plan that is based off of your needs and what you're trying to accomplish, and that there are no biases, and that whatever it is that I need, you're going to access.
Sure.
But that's actually not the case. Most Wall Street firms don't talk about the creative economy. They don't allow their financial advisors to talk to their clients about the creative economy. And then again, in my humble opinion, I just think that it's a big miss from a financial perspective. The future is very important.
Sure.
The public markets are half the size that they were 15 years ago.
Interesting.
And it continues to consolidate. Companies are staying private much longer than they ever were in the past. I mean, in 1997, Amazon went public.
Yeah.
They had $1.3 million of top line revenue, and they'd been around for 3 years.
Okay.
You fast forward to 2019, and you look at an Uber, which had top line revenue in the billions, and had been around for 11 years already.
Yeah.
The world has completely changed, and how we interact with the world around us is completely different than it was even 4 years ago. But when you look at how people are managing their money, it looks exactly like it did 20 and 30 years ago, which makes no sense.
100% agree. Yeah, interesting. Okay. So how else are you guys different from a traditional venture capital firm?
Yeah, I mean, in addition to the things that I've kind of already shared, I think that there are some key things that we kind of identified that we felt were important to try to improve upon. One of those things is just how we communicate with our investors. We believe that transparency is extremely important. So, we mark our portfolios either up or down on a quarterly basis. We provide our investors quarterly holding pages so that they know exactly where they're standing on a quarterly basis. We conduct conference calls on a quarterly basis, which allows the investors to communicate with us. We highlight founders from portfolio companies that we have invested in. We believe that there should only be a separation of one person between the investor and the founder. So we do that. We follow all of that up with a newsletter in case somebody couldn't make the phone call. They can read about it. That's a big piece.
Very cool.
Just I think the liquidity issues in private equity, we've tried to address some of those things and improve upon that, which I believe our investors care deeply about. It's really a family. Everybody who's an investor in our fund has my personal cell phone. They can text me or call me 24 hours a day. I'm always there for them. It's very much a family, and we've really tried to leverage our LPs to help our portfolio companies, right? We have a lot of investors in Latin America who own operating companies, and the companies that we're investing in can sometimes benefit from those relationships.
Interesting.
And so we leverage that. I think in general, how we look at investing in companies is very different. Everybody on this team comes from the public markets, and that was done purposely.
Okay.
And we obviously, the creative economy, venture capital is an asset class that, we all had to be trained in, we all had to be licensed in. We just saw significant opportunities to improve upon how people are investing in the space. And, because we come from the public markets, we think about the companies that we invest in with the end in mind. We know what it takes to become public. We know the scrutiny that the public markets are going to have on a company. And so we're doing all of that work and all of that development long before, we make a decision to go public. There's been some companies, most recently, some pretty famous companies that wanted to go public, but they didn't do all the lead work that I believe humbly that they should have done. And if they would have done those things long and before, they wouldn't have had the troubles that they have. And that's really how we think about things. You think about governance. Well, we're worrying about governance all the way back when companies are just getting started and teaching the founders how they need to act and how they need to talk for the end result, right? Wearing the suit of the person that they're eventually going to become. We require our portfolio companies to report to us on a quarterly basis. They have to fill out KPIs. So we know if there's silly things going on, right? I mean, if one of our founders is buying, as an example, buying a school, which has nothing to do with the core business, model that we've invested in, we're going to know that right out of the gate, and we're going to nip that kind of stuff in the bud long before it ever becomes a problem. And I think those are just, a few. There's a lot of other things, but I think that those are some broad brush things that make us very different.
Sure. No, that's awesome. So at what stage do you actually put money in? Is it pretty early on? Do they need to have some revenue, or walk us through that?
Yeah. So the Rokk3rFuel fund is really, our expertise is seed through B rounds, to be honest.
Okay.
We like to see companies that have at least $500,000 of ARR, but it doesn't mean that we won't look at companies that don't have it.
Okay.
And it's really this balance of art and science, right? I mean, if you just look at it through the fundamental, financial, scientific measurements, it's kind of hard to find anything that you would invest in. So you have to balance the science with the art and understand what the company is actually doing, what the disruptive tendencies are of this company, who are the people that are behind the company, and really understand all of that stuff so that you can make good decisions. We have actually invested in companies that have no revenue, but the founders happen to be very well known. Maybe they've taken 13 different companies public before, for example.
Gotcha.
They're billionaires themselves. They've built a number of unicorns. You have to manage that and add it to just the fundamentals. But so yeah, we will look, and we have invested in companies pre-revenue. The revenue ramps up pretty quickly because of the things I just said.
Right.
But typically we like to look at companies that have at least 500,000 in ARR, have already established a product market fit, have a technology stack that we can review and improve upon if we feel it needs to be improved upon.
Sure. And what geographical regions do you guys invest in, or does it not really matter?
Yeah, we're agnostic to the geographic region. It actually came up in a conversation I had this morning. I'm leaving here tomorrow. I'm flying to Korea, and
Nice.
I'm speaking for the IDB. And this question came up to me. I think for us anyway, we want to look at things that are, information has been democratized. So creators around the world it's much easier for them to build companies and be creative. And you don't have to, journey to Silicon Valley anymore.
Yeah.
Those days are over.
Totally.
And so, we are agnostic on where a company comes from. We'll look at it from anywhere, actually. We just invested in a company, Soundtrack Your Brand, that's in Sweden.
Oh, very cool.
It's extremely cool. And, so we're agnostic. We're in Miami, which is the headquarters of Latin America. So we obviously see a lot that's going on in Latin America. We're very committed to that jurisdiction. We think it's, it's a hotbed. We think it's an up and coming, tech, very rich soil. And so we spend a lot of time there. We haven't actually, dispersed any capital into the region with respect to investments, but we spend a lot of time developing companies over there.
Interesting. So is there specific verticals of companies that you try to invest in, or does industry not really matter to you?
We're very industry agnostic as well.
Okay.
Our underlying investment thesis is exponentiality. So we wrote a book called Exponential Organizations. One of the general partners, Salim Ismail, wrote that book, and really what that is it's a 3-year study of how is it that an Airbnb, for example, that doesn't own anything, nobody knew anything about it, and within 6 years can reach a $1 billion valuation, when it took Hyatt 60 years to get to a $1 billion valuation. What are the characteristics of that company? And if you can understand what those characteristics are, well, then you could go and look for those characteristics in other companies that you're analyzing. And that's really what we do. We have a proprietary algorithm that allows us to kind of sift through companies that come through the system. We've looked at 10,200 companies in the last 2 years. We've invested in 13, soon to be 14.
Wow.
So it's really hard to get into our fund, but that's, again, all purposeful. We believe that if you look at venture capital historically, and again, this isn't to be disparaging, it's just a fact. Most venture capital funds will lose between 75 and 90% of the companies that they invest in. And
Sure.
We just think that that's a horrible way to manage other people's money. And, we really we're holding ourselves to having, kind of taking the industry and putting it on its back and saying, no, let's have 20% failures and 80% success. And so if you're going to take on that mission, then you have to be much more thoughtful in the selection process. And so, we are agnostic to the vertical, but it has to have exponential tendencies. And if it has exponential tendencies, we will figure out the vertical. We have incredible partnerships with Singularity University and X Prize, and we have an incredible network. And so we can ramp our education up if it's in something that we're not 100% aware of.
Interesting. So I'm curious though. You mentioned this algorithm and it's proprietary, and I don't want you to like give away anything that you don't want to talk about. But is there certain things that a lot of your companies kind of have in common, or things that companies coming to pitch to you guys must have, or they're just not going to make it, even have a chance at making it through?
Yeah, and we call that the exponential canvas. And so
Okay.
that's things like leveraged assets, leveraging dashboards, their own algorithms. It's largely tech based. Are they leveraging the crowd? Different things like that. It's really about efficiencies that most of these exponential organizations are using. You think about Uber. Again, Uber doesn't own any of these cars.
Yeah.
Uber doesn't employ any of the people that are driving, and that's a big factor, right? It's leveraging assets that are not yours, and just simply creating a software program behind it that the end consumer can use to their benefit, and everybody wins. I mean, that's an example of a very big point that we look for.
Interesting. You guys also do a bunch of stuff that has something physical, hardware, or like scooters, or stuff like that. Do you look for things that are kind of something in the physical world and software and combined, or does that not really matter?
No, it has to have a combination. Like you were
Okay.
talking about the scooters, you're referring to Bolt Mobility, which
Yeah.
is one of our favorite portfolio companies. And that is focused on mobility, which is a big investment theme of the fund. By the year 2030, it's estimated that 8 billion people around the world are going to migrate to the major cities around the world. Now, that's a big statement when you think that there's only 8 billion people on the planet today.
Sure.
So you start to think about what that is going to do to the infrastructure of these cities. And these cities today, every city around the world, every major city around the world is literally worried about this. They're planning for it today. And, people don't really realize how these scooters, the impact that it really makes in allowing people to solve that first and last mile. And so Bolt Mobility has done, a lot of things to improve that space from a business perspective and the economics, which is what made it appealing to us. But they've also included technology. So like their biggest scooter, it's called the Chariot, and it has an iOS unit on the unit. So,
Interesting.
we know where that unit's going. We know who's using it. We know what point they're going from A to B. The data that we're now collecting is very powerful. And that data can be sold and used and leveraged, and which is another one of those elements of the exponential canvas that we're looking at.
Interesting. Yeah. Well, and tell me if this is a good example of what you're kind of talking about here. Is, for example, like I work downtown. It's about a 30-minute commute for me, give or take 10 minutes, kind of either side. But I park like a few blocks away because I like the walk in the morning. It's also cheaper to park like by almost like more than half sometimes. And I like that, 10-minute extra walk in the morning. And I can pick up, like in theory, I could pick up like a Bolt scooter to actually get me from, where I'm parking to the office. That's what you're talking about, that like kind of extra last kind of mile, right? Is that a good example of what you're kind of talking about, how you leverage technology, like on days
Yep.
that you maybe need to get there quicker, or you don't want to walk, and you also save money, right? Because if I'm just spending less money on parking and then I can pick up a scooter quick to take me there, like I'm saving a ton of money.
That's exactly right. That's that solving the first and last mile. So to give you some more statistics, right?
Sure.
In the United States, 60% of all car usage, 60% is between the mile 0 and mile 5.
Interesting.
And 87% of those car travels are single passenger car travel.
Right.
So now you start to also think about the average car sits doing absolutely nothing 75% of the time. And it's the largest investment that the average American makes. I mean, think about it. You buy a beginner class vehicle, you're talking about, $15,000 to $25,000.
Yeah.
It's a lot of money.
Yeah.
And you can go, you buy a Jeep today and you're going to spend $50,000 to $60,000.
Yeah. Easily.
So, you start to think about that, and then you start to think about the fact, I got to pay for insurance. I got to pay for gas. I got to pay to park it. And I know that there's more and more population coming into the major cities. So I'm spending more time in traffic than I ever did before. Why the hell am I doing this? And so it is expected by the year 2030 that car ownership is going to drop by 85%. So it is, from an investment perspective, it's obviously something to lean in on, and we're very focused on it.
Sure. And obviously you guys could move into other physical motorized vehicles of whatever kind at some point if need be and the need arises. That's actually really interesting. So,
well, that's another one of the things that makes Bolt interesting to us is it's an ecosystem.
Right.
It's not just about the scooters. They have electric cars.
Sure.
That, again, like I said, 75% of the time that car's doing nothing. Well, I can buy an electric car from Bolt for $10,000 if I want to own it. And then I can put that car on the Bolt app, and I do revenue share with Bolt. And so if you and I live in the same building and you don't have a car, but you need to use a car for whatever reason, you can go to your Bolt app and you can say, hey, on floor 3, there's a Bolt. And you simply go down there, you use the car, and you bring it back, or you drop it off wherever you drop it off, and I get paid for you using my car.
Yeah, that's
so
awesome.
They have the electric car, they have the scooter. We're working on the electric car driving into a cradle. It'll soon be a drone.
Interesting.
It's an ecosystem.
Sure. No, I think that's really great. Do you want to give us a few other examples of some companies that you invested in and the technology that they're working on and building?
We have so many, but Emerge is out of Los Angeles, and they are in the virtual space. So if you think about like virtual reality right now,
Yeah.
The word itself is what you see. I'm sure you've been in a virtual room before.
Yep.
What Emerge is doing is they're creating the sensory along with the visual. So if you and I were in a virtual room together and I put my hand out, you could shake my hand and you'd feel my hand shaking your hand.
Yeah, that's cool.
So that's a technology that we're invested in right now. We have invested in Omni Labs, which is a robotics company, and super cool things around avatars. And we really believe that in the near future, people aren't going to travel like they do today because you're not going to need to.
Sure.
You'll simply tap into a robot that's on the other end of wherever it is you want to go, and that robot becomes your avatar, and you can go experience whatever it is you want to experience through the eyes and through the robot at a different location. And so we're invested in that. Spotify for Business, which is now Soundtrack Your Brand. You think about, you probably heard about what's the bike, Peloton.
Yeah.
They got a $200 million fine. Well, what Soundtrack Your Brand does is it provides, business owners, restaurants, nightclubs, things like Peloton who are offering music, but you have to license that music. You have to pay, the artists for that usage. And so Soundtrack Your Brand allows business owners to do it in a very effective way with a huge library to choose from. So that's a really, really special company that's out of Switzerland. It was built by the team that built Beats that was sold to Apple Music. Yeah, so it's a very
like
famous
billions of dollars.
engineering background. $4 billion actually.
Yeah, there you go.
Add Mobilize, which is just a crazy, amazing business that has really kind of taken over the outdoor digital advertising and screens.
Sure.
There are 20 million screens in the United States right now that don't have data.
Which is crazy.
And when they plug into the Ad Mobilize, they now have data. And those, how many people walk by, if it's a woman, a man, if they were happy, they were sad, how long did they look in the window, did they go in and buy? It's just all the data that you can imagine, and that's Ad Mobilize. We've got really great companies. I could it would take us forever to go through them all. But really great companies. TaxFile is an amazing. We got taxes that are coming up here pretty soon, so they have a B2C business which allows people to do their taxes with their iPhone. You never even have to talk to an account CPA. You can do it all through there. And then they have a great B2B business where they white label their technology for major firms, which are basically the top 10 of the top 20 financial institutions in the world right now. So, an incredible business.
Very cool. Why I wanted you to mention some of those is so people can have some sort of idea, because what I always liked about you guys when I found out about you guys a number of years ago, you guys invest in these like big kind of ambitious goals, but they also have a business model, which that last piece, having a business model, is obviously key to being successful, where I find you meet some people that have a really great idea, but no way to actually monetize it, right? And it's like, that becomes really, really difficult, right? Sometimes it's easy to monetize, if you have somebody that knows what they're kind of doing, but sometimes you're just like, that's a really great idea, but I don't think you can make money doing that. Where what really stuck out to me with you guys is you have these big ideas that people are actually have a business model that can generate revenue. Maybe they're not necessarily generating, cash flow positive day one, but they have the ability, and it looks like they're going to do it from kind of day one, right?
Yeah, I think that as Miami continues to build out its ecosystem, I really believe that that's what it's starting to get known and trusted for. We're building real companies here, especially our firm. And because we come from the capital markets, we know how important it is to, have the ability to showcase the fact that you can be profitable, because that's what investors want.
Sure.
And so, we're building real companies, and we're investing in companies who have founders that realize that, if you really want to take this thing and ring the bell in the New York Stock Exchange, there are certain things that you have to do, both from a personal perspective and how you conduct your daily behaviors and developing an executive mindset, as well as developing a investable business that, the public markets are going to be attracted to. And again, working with the end in mind, and that's what we're trying to do. And, at least from the perspective of Rokk3rFuel, that's what we're hoping that Miami becomes known for.
Sure. Well, I really think it's at least, if not, it already has in a lot of cases, but it's definitely becoming that. I think more and more people are hearing about the hotbed that kind of, even you could argue maybe South Florida, right, it is becoming.
Exactly. I mean, we were talking about TaxFile. I mean, TaxFile is 4 years old. It'll be profitable in a year.
Yeah, that's
and awesome. This is a company that we plan to take public in 4 years. $2 to $5 billion, right? Wow. And so, that's right here in Miami. AdMobilize is another example. Bolt Mobility. I mean, they're, these are good operators. These are people who have run serious companies. And, it's not just about raising money and spending it all. I mean, it's a really, these are, tried and true executives who are really doing a great job of disrupting a space that is in desperate need of improvement.
Sure. No, I 100% agree with you. So I think not every business needs venture capital. Maybe they need it later on, maybe they need it earlier on, but I think maybe like not every business I think needs it necessarily. How do you decide what type of capital you need from a business standpoint? Like, what advice do you give people to say, like, you know what, you're not ready for venture, maybe you don't need venture, maybe you do need venture, but later on? What's your advice around like when to raise what type of capital?
Well, I can only speak for our firm,
Sure.
And what I would tell you is what you need in order to get attracted to us. And that would be, you need to be a good business person, right? I mean, I think one of the things that always irks me a little bit is when I sit down with someone and they really don't have any financial acumen. Now, I'm not saying that you're if you're a technologist that you need to have financial acumen, but you better have someone on your team that does. Because again, this is a business, and we're in the business of investing other people's capital into these companies. And I want to make sure that who I'm talking to understands that. Because if I find that this is just, give me money so I can go play in my laboratory, it doesn't work for us,
Sure.
right? So, I think the other thing that you always have to keep in mind as a founder is that venture capital firms and people like myself, we're responsible to a lot of individuals who have entrusted their capital, their life savings in some cases to us. There's a fiduciary responsibility to those individuals. And as a result, the moment that you align yourself with a venture capital firm, you've got to understand that things are going to get extremely intense.
Sure.
Because it matters, right? There's a lot of people now that you are responsible for. And so making sure that sometimes our founders get a little angry with us when where are your KPIs? And it's like, 3 days after the end of the month. And it's like, we're busy. Well, I don't care, right? We're all busy. I work 70, 80 hours a week. I expect you to be busy, but I also expect you to understand that these KPIs, these numbers are important because we're responsible to other people in managing their money. So I think that you just got to understand that when you make that decision that you're going to go and do that, life is going to change. It's going to become very serious, at least if you're working with us.
Sure.
Because we take it extremely, very, very seriously.
Sure. So you basically need to make sure that the venture company or investors are a good fit, and you are willing to deliver what they expect, and vice versa, right? And to your point, like, some are more lax than others, right? And that's not, one's better than the other necessarily, but I agree with you. If you expect them the last day of the month or every quarter, they better have them that, or at least have a really, really good reason for them to miss those dates. It makes total sense.
Yeah, and for me, I think it's a lot about, the human condition is habitual in nature.
Sure.
And if you're disciplined and you realize that these things are important, you get them done, and then that follows through to other things that you're doing. If you're lazy around, your investors, then you're going to be lazy around a lot of other things that aren't that important, because what matters most can never be at the mercy of what matters least.
Sure.
And so everything matters, and we're looking at everything. It's not always what you do, but what you don't do. It's not always what you say, but what you don't say. And again, these are all things that we're trying to develop, and if it's needed, right? Not everybody,
Sure.
Needs it, but sometimes the leadership development and the executive thought process is missing, and that's one of the things that we input above and beyond the capital that we input.
No, very, very interesting. The other thing that I found really useful that you guys do is you guys post really good blog articles on Medium. You can get them from your main website, but you guys write some really interesting articles. So do you maybe want to give us a quick overview of the stuff that you guys try to talk about there? Because it's all over the map a little bit, very much related to the space, but it's really good information.
I think it's thematic, and I appreciate you saying that it's really good. I will say, pointing inward, I think what we've done is really good, but it's not enough.
Okay.
And in fact, we've got a great partner, Deborah Lima, who works in our marketing and branding department, who's actually a former journalist and an incredible writer. And she's actually joining the team to help us do even more. And I'm super excited about that.
Oh, very cool.
But, we think it's super important to share our intellectual thought process. We believe it's a responsibility of ours as we continue to help investors understand that this is an important asset class to have in their portfolio construction. And you have to educate people, and you have to have an opinion. And that's what we try to do. And so when you say it's kind of all over the place, I like to hear that. That means we're doing the right thing, in my opinion, because
100%.
It's thematic. It's what do we think investors need to know about? What do we think, based on conversations that we're having with investors or founders, that we think we need to write about and have an opinion on and share our thoughts.
Sure. You touched on something there about like trying to educate maybe people that don't think of investing in startups or giving their money to a venture capital firm to like you guys. How do you actually mitigate their risk, or what are the things that you do to maybe make them feel better about basically investing in startups? I get it's through you guys, but some people get scared by investing in startups, right?
I think a lot of that comes from the question that you asked me is what makes us different. I mean, everything that we have done to try to be different is really about that, right? Because our focus is ultra high net worth individuals and family offices.
Sure.
And firms that serve them, right? And all three of those categories, by the way, are individuals who know they need to do it, but have never done it before. They need to be educated. They need to feel comfortable that they're working with people that take it really seriously, that are very pragmatic, and have a plan, have a process, and have a discipline. And so, when you ask me, well, how do you educate people? It's through our thought leadership that we do. It's from people who, the birds of a feather flock together, and we have someone who comes in, a family, and they end up investing, and Friday night they're at dinner with another family that's as wealthy as they are, because that's how it works. And
sure.
We end up coming up about all the cool things that we're doing, and that investor is extremely excited because they're a part of it. And then that family member the people that they're with want to meet with us. And we spend a lot of time educating them on the asset class. It's a non-correlated asset class, meaning, if the overall public markets are down, venture capital usually is up, and vice versa. It's actually one of the only asset classes that remain out there because of the democratization of information that is actually non-correlated.
Interesting.
And if you really think about it, right, it's all we're doing is investing in operating companies. I mean, if you think about the wealthiest people in the world, they all built their wealth by owning private operating businesses.
Sure.
And eventually selling them to the public. So people really don't. I think that there's this image that it's some kind of a mystery, or it's some kind of a game, when it's not. I mean, all we're doing is identifying incredible business people who are building businesses that are someday going to be public, and we're providing access to those companies in the private sector long before it gets diluted in the public markets. And that's where we believe that there's a tremendous amount of performance alpha that can be picked up.
Sure. Well, and it sounds like in a lot of cases, you're basically going to these investors or people that are willing to put their money in and say, look, we found basically younger versions of you, and we're going to gamble on them just like you gambled on yourself and or other people gambled on you, right? And we have all these mitigations and algorithms in place to make sure we hit 80% instead of 20%, right? Something like that.
Yeah, and I think it's super well said. The only thing that I might adjust a little bit is that word gamble. We don't gamble with other people's money. We just don't. Every decision that we make is extremely thought out. It's got a tremendous amount of analysis and thought process that went behind it. And I wouldn't say it's a gamble. I wouldn't say it's a bet. I would say it's a very thoughtful investment.
Sure.
And that would be the only thing I would alter in what you said.
No, that's perfect. But we're kind of coming to the end of the show. So how about we close with mentioning where people can get more information about yourself and Rokk3rFuel, and any other links you want to mention?
Yeah, so you can check us out on Instagram, Rokk3rFuel, EXO. You can check us out on Twitter, same tag. LinkedIn, same tag. Our website is www.Rokk3rFuel.com, and Rokk3rFuel is spelled ROKK3RFUEL.
Very cool. Well, Jeff, I really appreciate you taking the time out of your day to be on the show, and I look forward to keeping in touch with you, and have a good rest of your day, man.
Hey, thank you for having us on. I appreciate it very much. Ciao.
Thank you. Bye.
Thanks for listening. Please visit our website at buildingthefutureshow.com to join the free community, sign up for our newsletter, or to sponsor the show. The music is done by Electric Mantra. You can check him out at electricmantra.com, and keep building the future.